Hello and welcome back. This is Wade into Wealth. I'm Chuck Wade, my brother Ethan here as well. We're both, well, if you're watching us on YouTube, you may notice a bit of a tan, at least on the faces of each of us and certainly on the top of my head. That's because last Friday we had our annual Shred Day event here at the Brighton office near 12 Corners in Rochester, New York.
Big success.
Big success.
Most ice cream sundaes sold yet.
People love to get
not even sold because they were free.
Yeah, big event.
Most ice cream
lot of
sundaes
folks
provided.
I made the mistake of not wearing a hat. Now the irony is, I almost always have a hat on when I am not here.
Oh,
almost always.
The
And
irony, Mr. Chuck.
You looked like a political candidate. You had the baseball hat on. You had your aviator shades and shirt
Even
and tie.
had my sleeves rolled up.
You did. You looked like
not
you were about
not
to
a normal thing for me.
to go shake some hands and
It was
kiss
hot
some
in the
babies.
sun. It was hot in
It
the
was a
sun.
hot day. But a great success. Lesson learned. But now that burn on the top of my head is turning into a nice tan. So
Yep, very much so.
Coming up roses.
Very much so.
Speaking of Shred Day, if you are west of here, this coming Friday, May 27th, at our Batavia office, from noon to 2 p.m.
Yep. Genesee County. We
it's
got
back.
you.
So I know
Big Shred Day in Batavia.
Don't rip mine. So
Big Shred Day in Batavia.
Okay, awesome. Just rip my page. So
Ripped mine last time.
Appreciate
so yours,
that.
yours needed it this time.
Thank you very little.
They go back together.
Yeah. Okay.
You want tape?
No. I know we do have listeners in Batavia, Leroy, Albion, Holly, Byron, Bergen, Lockport, Medina. So if you're out west of here, feel free to stop by. It's at 212 East Main Street in Batavia. They've dessert at that?
I don't
Snacks,
know.
refreshments?
I don't know. I'm sure that they'll have some sort of
Something.
snacks. Yeah, I think in years past there have been brownie trays and
Okay.
Wegmans chocolate chip cookies,
Okay.
which
Tough to go wrong.
if you think that you can't eat just one Lay's potato chip, try eating just one Wegmans small soft cookie. Impossible. Impossible.
It's tough. My wife brought a box of those home. She had some friends over this weekend, and there were a few left. She said last night, she goes, "Where'd the cookies go?"
Don't worry about that.
I don't know. I know where they went.
They gone.
I know where they went. Couple
They're
went
gone.
in the kids' lunches. Couple went to me.
Yep.
It's the dad tax.
That's
it has
right.
to be paid.
Mm-hmm.
So
Do you want my outline?
No, I'm good.
Okay, good.
So this week we're talking about I bonds, and we have poo-pooed bonds a lot on this podcast, not because there's anything wrong with them, but just because the circumstances for a large part of the time we've been doing this podcast is that bonds haven't provided great returns.
Yeah, I'd say I don't know that poo-poo is the best word. I think we've just tried to educate on the circumstances, but
They haven't been the most attractive investment vehicle.
nope, but they're looking better.
But they're looking,
looking
a
better.
lot better now for folks looking for income that is stable. And then here's the thing. With I bonds, which we have been asked about, we're going to get into, government-issued bonds, we can use the G word here. Interest that is guaranteed. Because it's backed by the full faith and credit of the federal government.
Yep.
They
it
own
is.
the printing presses.
Yep.
So it is guaranteed interest. But why are we talking about these? Because, I mean, typically when you think of savings bonds or government bonds, you think of something that maybe your grandmother bought you.
Yeah,
You
Series
found
EE
somewhere,
bonds.
The Series double E bonds. I found
Yeah.
some of those one day. I found
Sure.
like about $400 worth that Granny had bought for me.
I think I still have one. I have more than that. I just don't know where I put them when we moved, and I have one in an envelope, and I don't know where the rest of them.
They're
are.
not easy to cash either. They're
No,
not.
you were just rattling off all the things that you found in your
Yeah, a lot of
weekend
stuff.
moving, and
Yeah.
there are Series double E bonds are
Yeah.
in some box in our house.
That's not what we're talking about today. We're talking about
No.
Series I bonds. Why is that?
Well, because of inflation.
Yeah.
And inflation, so the U.S. government sets the interest rate every 6 months.
Mm-hmm.
And it's a fixed rate plus, what's the additional amount on top of it?
I don't know the exact amount,
inflation
but it's
rate
an
that they're
inflation
using
rate.
just,
So basically there's a base, and then there's a premium that is tied to inflation. Now, if you've bought anything lately, you've probably noticed that it likely costs more. That's inflation.
And inflation is a jargon term. That means that the prices of everything around you are going up. So
Everything's
bread,
more expensive.
meat,
Gas.
vegan cheese,
Yeah.
already expensive, even more expensive.
Yep.
Everything's
Everything
going
costs
up in
more.
price.
There's very few things right now that cost less than they did.
Yep.
A fair amount of investments the stock market does
For now.
For now.
For now.
But in general, things are more expensive. So
these bonds benefit from prices everywhere going up, the name inflation. And so I think the rate because they only set it every 6 months.
Every 6 months. Yep.
Is into October of this year, more than 9.6%.
9.62% to be exact.
So you said the G word. I'm just so averse to saying that word. It's still it's tough to say, but that's pretty good
can't
rate.
Be said about most investments.
Yeah, I mean that's a phenomenal 9.6%,
right?
Backed by the United States government. Now, are there drawbacks to these? Probably.
There are at everything.
Well, of course, there's pros and cons to everything. You have to hold it for a year. You can't get out of it before a year. And if you feel that you need this money before a year is up, this is not the type of investment for you.
And there really isn't an investment if you need money for less than a year.
Savings account.
Typically, you want to leave that money in your savings so you know that you have it, you know it's not going anywhere, and that it's available when you need it. But I have gotten a lot of calls about these.
Well, sure.
A lot.
What's another key drawback to them?
Well,
you can only buy $10,000 per person.
The amount you can purchase.
Yeah. I mean, it'd be great if we could go in right now and get a portfolio full of bonds paying you 9.6%, completely backed by the United States government.
It'd be great. Yeah.
Yeah. Everyone would do it.
So you're allowed $10,000 per Social Security number. So if you're a husband and wife, you can each buy $10,000
in electronic form.
In electronic form. You can use your tax return and tax refund
for an extra $5,000 in paper form.
Yeah. They don't make it easy, but you have to note
it. Why would they do that?
Well,
either just let people do 15,000 or not.
Well, we're talking about the government. Look, and
Here's some paper so that when you move in 20 years, you'll still have this sitting in a box somewhere.
Most companies, if you want to buy stock in paper form, they either don't let you buy a certificate or charge you an amazing
they'll charge you through the nose, so you don't do it.
$300 to buy.
Right.
There's a reason. Yeah. And it is idiotic, but we're talking about the government. And look, I don't care which party we're talking about. They find a way to mess it up.
Oh, yeah.
So, yes, you can technically use your tax refund to purchase an additional amount.
$10,000 per year. Not set by 12-month intervals, but set by the calendar year. So if you got $10,000 back in November of 2021, you don't have to wait until November of 2022 to get another batch. You could do that at any point this year. It's based off of calendar year.
Big question to ask with bonds. How long are they good for? When do they mature? They pay interest for up to 30 years.
Yep.
Now, you don't have to hold them for 30 years. Typically, it makes the most sense to hold bonds until they mature. You can cash them out prior to 30 years as long as you've waited for a year. Now,
I think if you do it within 5 years, they might charge you 3 months worth of interest as a penalty.
If you buy them out prior to 5 years, there's a 3-month interest penalty.
Yep.
Which again is not the end of the world, and
not if it's paying 9.5%.
No. So let's talk about how you can purchase them, and then let's go into a couple scenarios of where it would possibly make sense to acquire some of these. So you can't buy them in an IRA.
Or a typical brokerage or investment
kind of
account.
Brokerage investment account. If you have a
you can't buy them at your bank.
Schwab account, you have to purchase them through treasurydirect.gov.
Don't go through any other site.
treasurydirect.gov.
Any other site likely to be a scam.
Don't.
That's the only website. treasurydirect.gov, G-O-V, is where you can get them.
Right. You can't buy them anywhere else. Okay, that's the only spot. You have to do it online. You have to link your bank account. It is pretty simple and straightforward. I walked a client through it the other day. It's very basic.
Yep.
So I have to think that if you're able to find and listen to this podcast, you're able to find and acquire Series I bonds if you're so inclined.
Can the interest come down?
Well, the inflation
of course
premium
it can.
Yes, absolutely.
So if inflation starts to slow and it's coming down some, by October, it's likely you won't be able to get 9.6%.
No.
Or if it continues, who knows, you might be able to get even more.
No. And keep in mind, too, that is an annualized number.
Right.
So when they say 9.6%, you have to hold that for 12 months to get that 9.6%. Now, they reset it every 6 months. So for the next 6 months, that interest is an annualized number, meaning you aren't going to fully earn 9.6%. Yep. You would own half of it if you owned it, or you'd own a prorated amount because that rate would not be reset until October.
Yep.
I was starting to go off into the weeds there, but it's important
never.
Not ever. So the rates are reset every 6 months. That's important to know. I think the thing is, I don't know that inflation is coming down that much in the next couple of months to where all of a sudden these bonds are going to be paying 4%.
Oh, yeah,
in
that
October.
seems unlikely. But it could be 9, could be 8.5,
right.
8.75. And even then, that's still pretty darn good.
So what are some scenarios in which it may be beneficial to consider purchasing these? First, you have to have the cash on hand. Again, it can't be in an IRA, so you would need it to be what's called non-qualified. You would need it to be outside of an IRA. So in your bank account, savings account, something or an investment brokerage account that you had sent back to your bank.
Yep.
You have to have the money. It can't be in an IRA. Why buy it?
Well, you're going to get 9.6%
Yep.
annualized. And, I mean, only buy it if you have no use for this money in at least a year. If you have a lot of money sitting in savings at the bank, because we know that when interest rates go up, the bank is very, very quick to increase the rates they charge their customers.
Yep.
And very, very, very slow to increase the rates that they pay their deposits, their savings accounts. So if you have a large amount of money sitting in savings above and beyond your emergency fund need, and you have no use for that money in the next year or so, be a great spot for it.
Yeah.
You get much more than what the bank savings is paying you. And the interest is free of state and local taxes.
Another benefit.
Yep.
Especially if you live in New York
State, man.
Right?
Look at
Yeah,
that.
Look at that. Well, as two
Said
people who
two
live in New
folks
York
who live
State.
in New York State.
Yeah, and so I've had clients call and say, look, I'm really interested in this, and we have taken money out of brokerage accounts, or that they might have cash sitting around, and sent it to them at the bank, and they've reinvested it into I-bonds, because the reality is we can't beat that. You can't really beat that with individual bonds, corporate bonds.
Well, no. Not backed by the U.S. government.
No. So there are a lot of scenarios where it's beneficial. And even then, I would say it's not the end of the world if you were to hold it for a year, 13 months. And if you needed it, okay.
Just understand your circumstances.
Right.
If you don't really have a need for that money in the near future, it can be a good investment for it above and beyond what you're getting at bank savings. If you feel the need to take it out of stocks to put it in there, okay, that's at your own devices. While stocks can go down, they also can give you the potential to beat that type of return. Like type of investments, like another bond with similar safety to the U.S. government, you're not going to get anywhere close to 9.6%.
Yeah. And I know for a lot of folks, it's not a financial decision that is going to change their lives, because you can't invest enough into them for it to really make a significant amount. But
you'll make $900, assuming that's the rate for the full year, you'll make $960.
Right. Now, if you're a family,
not going to change your retirement.
Right.
But at the same time, it doesn't suck.
No, but I think the perspective a lot of people have too is that bonds from the government have paid such little return.
Sure.
Well, now I can get a better return, and I can feel better knowing that, hey, this is guaranteed. I know this is coming, so that makes people feel better.
Mm-hmm.
So that's a component to it as well. Again, the only place you can acquire these is treasurydirect.gov. You can't buy them anywhere else.
Don't try. You're being scammed.
No. Okay. Anything else on I-bonds?
No, I think that about covers it.
Okay. Reminder again, if you've made it this far, noon to 2 on Friday, May 27th, Shred Day at our Batavia office, 212 East Main Street. It is free. You do not need to be a Brighton Securities client. If you have old documents, feel free to bring them down. If you bring them down in a paper bag, we can also shred the bag.
That's right.
If
Only
you bring them
after
down
we
in
empty it
plastic
first. Yep.
or in cardboard, we're going to give those back to you.
Got to take them home with you.
Okay? Take them home and recycle them.
Yep.
I think that covers it.
I think so.
Okay.
You mean to shred your paper again?
No, you already did that, and
Good.
I do appreciate it. We do appreciate you being with us, and we will return next week.